What's going on, everybody? Welcome back to Trading Options Network. Today is a fun day. We have a lot to discuss today. But before we discuss anything, let's get the disclaimer out of the way. As always, everything we discuss is solely my opinion, not the opinion of Trading Options Network. So do with the information what you will, but take responsibility for your actions. And of course, be sure to like, follow, or subscribe on your favorite social media platform to stay up to date with everything that is Trading Options Network. All right, let's get into it. So, why did this not go away, first and foremost? There we go. There we go. All right. So the first thing I wanted to bring up was the data that came out this morning. As I had mentioned yesterday, we're going to see the CPI today and the PPI tomorrow. Now, CPI definitely came out hotter than expected. I'm not gonna. I mean, in the grand scheme of things, when we're expecting a 0.2 and that's a 0.3, it doesn't sound like a ton, but in reality, that's a 50% overage, I guess you could say. I mean, I don't know if there's any underlying rounding going on or anything like that. Like, oh, hey, we were expecting a 0.24, but we got a 0.26. And of course, it rounds to 0.2 and 0.3. But regardless of that, I don't really care. The fact of the matter is that it came in hotter than expected, and unemployment claims also came in hotter than expected. And these two do not bode well together. We don't want to be seeing right now unemployment claims increasing while CPI is also increasing. That is going to bode very bad for the economy if that continues. That being said, we do have the PPI again tomorrow, so we'll see what that brings. I would expect it, just like last month, to be kind of hot as well. But again, we'll find out tomorrow. If we look at the map, market doesn't really like it. Now, interesting thing about this, if we did this about 4 hours ago, a lot of this would have been green, believe it or not. If we go ahead and look at the oops, I must have accidentally clicked on the 3 minutes somehow. I'm like looking at that like that's not right. But regardless, we go ahead and look at the chart. As you can see, it was actually wanting to go higher earlier in the day, but it's definitely has come back and is back to where it opened up, where it gapped down. But again, excuse me, definitely tired today. But still got to put in that work. We still got to put in that grind, right? So we did gap down. We actually went green for a brief period of time earlier today, but then has come back to where we opened. So again, we're looking red right now. This is, if it finishes like this, that's definitely a reversal signal. Okay, I'm not saying it's a reversal candle per se. It's just a signal that we may be reversing. We would obviously have to see confirmation afterwards. The doji is never a reversal on its own. It is a potential reversal. If we go ahead and look at this, that technically is a doji, even though it shot up so high, it gapped up the way it did. These can be argued as, almost a doji. Not quite exactly by definition a doji, but close enough to be considered one. So is this, but again, nothing really actually changed here. Let's see. This one right here. Again, it's not an exact doji, but it is a pretty close open and close with some wicks on it. And sure enough, even though we gapped up there, we did definitely go down. I'm not gapped up. We had a little bit of a jump there, but we finished that day right there, and then it went down a little bit more. I'm sure we could go back and find a lot more examples of dojis. Here's one right here. You can even argue that one maybe a little bit. Couple right here. You can even argue that can almost be like a doji. Now, we didn't get confirmation, but we did finish that day as a doji right there. And the next couple of days, we went down and then we gapped down. Of course, that was the end of that. But anyways, back to this. Just because we are looking like a doji does not mean it is going to be a reversal tomorrow. It's just meaning we're indecisive today. That's all it means. CPI data came out today, and I don't think people liked it. But now People are waiting for PPI tomorrow, and who knows, maybe tomorrow we'll make our decision. If PPI doesn't come out hot tomorrow, maybe the market doesn't mind the CPI being hot today, and then we do go up. But again, all that is, hearsay per se, because we will not know until it happens. If we look at the equal weight, obviously we just took a look at the heat map, a lot of red, so we should expect to see this to be a little bit more red than the actual S&P itself, and sure enough it is. So we shouldn't be surprised by that. But again, until we see the PPI data tomorrow and what the market really wants to do, technically this is actually, if we look at these together, I'm going to refresh this and see if yeah, there we go. All right. So if we look at these together, although there's a lot of extra stuff on here. You don't need this with the Bollinger Bands because that's redundant. We don't need this. I'll leave those on just because. Don't need an 8-day. Put the CCI up on top and the MACD on the bottom. This is how I like to have it. All right. Now let's take a look at it. Obviously, we have some resistance here. And we are at the top of the Bollinger Band. Okay, so that would suggest, a potential reversal or at least a pullback. But again, this is still a bullish pattern. It's not a bearish pattern by any means. We're still definitely a bullish pattern. The 50-day is moving up, or I'm sorry, not the 50-day. The 50-day is right here, but it is still moving up along with the 20-day, which is kind of covered up by this blue line, which look like to be about, they intersect and are parallel right there. You can't really see them together, but we can see the gray line and the blue line intercede right about here. So they're both going up. Okay, so this is still bullish. Over here, also same thing. This is still bullish. Okay, we do still have everything over the 20 and the 50-day. Both are moving up. So there's nothing that we can say that is technically bearish in nature yet. Okay, and I use the keyword yet because a reversal can clearly happen, especially if the PPI does come out hot tomorrow. So moving forward, what I'm going to do is I'm going to talk about the stock that is going to be added to our watch list later on. If you follow me on social media, you will see that I put out a stock of the day and a tip of the day each day for the most part. The one stock that I'm going to be putting on my watch list is actually coming out of the real estate sector. Okay, let's go ahead and take a look at these sectors. A lot of these sectors right now look very bullish overall. Yes, there's been some pullbacks in a lot of these. There's no way we can deny that, with the exception of the S&P. It seems like it doesn't. There was an itty-bitty pullback there. That's the equal weight. Financial is doing pretty well. The one from yesterday was MasterCard, of course. If you're following me, you would have known that MasterCard is now on our watch list. And sure enough, I mentioned if the CPI, I mentioned yesterday, if the CPI data comes in hot today, then the financial sector will probably be down today. And sure enough, that's what it is doing. It's not down a ton, but it is down nonetheless. Let's see. A lot of these, the industrial sector is still killing it. And I mean killing it. It is really going off. Communication services is doing okay. Energy is doing so-so. It does seem like it wants to break out. Of course, XOM has a very similar chart, and XOM is also on our watch list, and we'll go over that in just a few moments. But this could potentially start moving up. Now, energy and utilities will oftentimes go opposite of what most sectors are doing. So we'll also want to watch utilities as well. If we go ahead and open up utilities, which is, there it is, I think. All right. So utilities was on fire. And of course, like a lot of the other sectors, it's having this pullback right now. But regardless, energy, gosh, I'm tired. I apologize. With energy coming, going down while everything else was rallying, if the market does start reversing and start having more of a bearish trend, at least in the near future, then we should be able to expect to see energy start moving up and breaking out of this, downward, channel per se. All right, going back to the real estate sector. The real estate sector is probably, I'm not going to say it's the worst performing sector of the year or anything like that, but currently it is the one that is having the pullback that is looking I guess for lack of a better term, it's looking the worst. Okay, the 20-day is already moving down. It looks like it's only going to take a couple more days for it to actually cross the 50-day. The stock price is now below the 50-day. So if you remember our grading system from yesterday, with my grading system, let's see, we're below the 20, we're below the 50, so that's negative 2 points. Okay. Now, the slopes of the 20 and 50 would be a 0 because they're not both going down. Okay. Technically speaking, the 20 is over the 50, so that'd be a positive 1. So now we're at negative 1. Then the only other thing we have to look at is a histogram. So let's see. Yesterday we were at -0.01. Now we're at -0.09. So that would be a -1. So overall we have -3 plus 0 plus 1, which obviously gives us a -2 score. So a -2 would be mildly bearish. Okay. But nonetheless, what I wanted to do, because we have currently from our previous stocks that have been put on our watch list, we have 3 bullish stocks on our watch list, or potential bulls, I should say, but no bears. So I looked really hard to try and find a bear, and I found UDR, which has a very, very similar pattern as the actual real estate sector itself. I mean, it's literally almost identical. I can almost put them on top of each other. Okay. But again, if I'm expecting the real estate sector to go down and these two charts are almost identical, then I would expect UDR to also move down a little bit. Now, I don't know much about UDR, and I don't really care to know much about UDR. All I care is that I understand the chart, and the chart is telling me that, hey, we had a pullback and the 20-day could not keep it up. And then it pulled back a little bit more, and the 50-day couldn't keep it up. And not only that, the 50-day there was no bounce off of the 50-day moving average while it was riding the lower Bollinger Band. So I'm absolutely bearish on this one. And provided we don't move up the rest of the next 30 minutes before the market closes, I might consider a position before the end of the day, because the way it gapped down below this 50-day, and I mean, it did challenge it and then just got rejected. So it gapped down when the day started. Let's zoom in a little bit more. Okay. Yesterday it finished over the 50. Today it gapped down a decent amount below the 50. It went back up to, I guess you could say, challenge the 50. Okay. And see if it couldn't break through that support/resistance line, the 50-day moving average, and got completely rejected and just sold off. Okay. So I am not liking this to be going back up at all. All right, so I apologize for that. But again, I do like this to move down. Now, I'm not saying it's going to move down or completely collapse, but I think we could easily ride this down to around 42, which is going to run into quite a bit of support there. But if it were to break through 42, okay, then we could even see it ride down a lot further than at that point. Maybe even around 40 or so. But again, we'll see what happens moving forward. Keep an eye out for trades today, because again, I might just open up this trade today. So that being said, let's go ahead and discuss our tip of the day. Now, I liked what I did yesterday in regards to discussing the tip of the day, which was to make sure you have some sort of a grading system, and it came off of came out of my trading plan. And what it kind of inspired me to do is actually discuss the trading plan a little bit more, and just kind of go through my trading plan through these videos. And obviously that would be starting from the beginning. So the very first part of my trading plan is you have to have some sort of personal assessment. Now, I have a website here, traderpersonalitytests.com, where you can actually take this test and it'll give you your trading personality. And then once you have an idea of what your trading personality is looking like, then you have an idea of how to go ahead and create a trading plan for yourself. Okay? Just because I have my trading plan, and yes, I will give it to you for free, that does not mean it is going to fit your style of trading. And I would never expect it to be a perfect trading plan for you, because you're not me. You're you. You can take this and change it to fit something that's a little bit better for you. There's no doubt about that. But again, you have to have you should have a trading plan, okay? And you need to know what type of trader you are. And when you identify the type of trader you are and your strengths and weaknesses, then you can, again, really build that trading plan that's going to really work for yourself. So moving forward, as you can see here, I got something called the Inspector, okay? My trading strengths were I'm honest and direct. I'm a strong-willed and I'm dutiful. I'm very responsible, I'm calm and practical, and I create and enforce order. Shocker, considering I'm doing what I'm doing. Also, I'm a jack of all trades, apparently. So I haven't actually looked at this for quite some time. So I forgot some of my trading strengths and weaknesses and everything. Because again, I've been doing this for so long that I don't even really come back to my trading plan, because everything down here and all these other pages I pretty much have memorized. But it is kind of interesting to come back and look at this. Okay. So let's get back to that personal assessment here. All right. So again, honest and direct, strong-willed and dutiful, very responsible, calm and practical, create and enforce order, and a jack of all trades. All right. Now my weaknesses. I'm stubborn. You betcha. I'm insensitive. I'm kind of taking that one a little bit personal. Always by the book. There's no doubt about that. Okay. Judgmental. Yeah, I would actually agree with that a little bit. And often unreasonably blame themselves. Abso-freaking-lutely. Okay. My wife will tell you, I am such a harsh critic on myself. So there's no doubt about that. There's no doubt about those things. Okay. So I'm sure you probably have heard the dogs in the background barking. Well, my daughter just got home from school, and now it sounds like they're tripping over their own dog bowls. Anyways, moving forward. So why am I bringing this up? Again, if you want to be able to be a good trader, it's more than just a good options trader. It's more than just being able to buy and sell calls and puts. Okay? It's knowing your personality. It's knowing what you need to do to keep yourself accountable. Okay? It's knowing and identifying your weaknesses so that you can do what you can to potentially prevent yourself from falling into certain traps. Okay? Maybe some people, you might get a weakness such as, likes to jump into things without all the information per se. I mean, I'm sure there's a specific word that I could use for that, but, earlier, a few weeks ago, I had a tip of the day was, don't get faked out by the first breakout, but somebody who jumps in without all the information just because they see something that they like right away could be that type of person who could do stuff like that. Okay, but if you identify that you have that weakness, then maybe you can prevent yourself from jumping into something. You'll remind yourself not to do it before gathering a little bit more information. Of course, some of your strengths, like for example, mine, very responsible. Yeah, I would consider myself very responsible. I'm definitely the type of person that when doing anything, I am going to be by the book. I think that was jack of all trades. My trading weaknesses is I'm by the book. So that's kind of interesting. that I'm responsible, but a weakness is by the book. Oftentimes you would think those would go hand in hand. Let's go ahead and read what this says for always by the book when it comes to trading. Inspectors believe that things will work best with clearly defined rules, but this makes them reluctant to bend those rules or try new things, even when the downside is minimal. Truly unstructured environments leave inspectors all but paralyzed. In trading, inspectors are excellent at following their trading plans and can learn to trade in volatile market conditions. Okay, let's go back to very responsible. That sounds like a good thing, not a bad thing. Let's see. Okay, where did I leave off? Provided they invest the time to think about possible contingencies in their trading and then script their contingencies into branch plans within their trading plan. If inspectors have branch plans to follow for these periods, they will follow them. However, if they don't, inspectors often aren't equipped to adjust positions or hedge an entire portfolio on the fly. Okay, so basically what this is saying is sometimes I don't have the necessary because I'm by the book, if there's a potential opportunity and it's staring at me in the face, I won't take it because I haven't actually done my due diligence. Okay, which, yeah, I would actually agree to that to a certain extent. There are times, obviously, if I see something that is so freaking obvious, I'm not gonna let it go. But yeah, very often if something is not, if something is there and I see it, like UDR, this is a clear and concise, hey, we're going to go down more signal. But I'm almost reluctant not to jump in, just simply due to the fact that, hey, one of my, my tip a few weeks ago is don't get faked out by the first breakout. Well, this is a breakdown. Okay, it just dropped below the 50, but I think because of the slope that it's been in trading wise, it just dropped from, 10% about in a month, just under a month. So this is not a breakdown in my opinion. The breakdown's actually happening right now, and it just broke below a key point. So yeah, I think we're going to go down further. So again, coming back to this, and again, that website is traderpersonalitytests.com. Okay, again, traderpersonalitytests with an S.com. If you go there, all you got to do is click on take the personality test, and you're good to go. Okay, and it is free. Okay, it's always nice. Free things are nice. But again, so go ahead, take that test, find out what type of trader you are, and identify your strengths, identify your weaknesses, and start building that trading plan for yourself. Okay, I wrote mine in about a week. Okay, once I identified my strengths and weaknesses, it was not too hard to write this out. Okay, all 40 pages. In fact, it was probably less than a week. It's probably more like 3 days. But again, I was motivated to get it done, which very responsible, jack of all trades, strong-willed and dutiful. Yeah, you can bet your butt that I got this done in about 3 days because I was motivated. So anyways, I hope this helps. Everything from looking at the market, looking at, one thing I did want to do really quick. Oh, what the heck? Why did that happen? All right. Well, I guess I had this exactly laid out how I wanted it, and something happened. So I guess we'll go over that more tomorrow. We were just going to go over our current trades that we have. We only have 2 open trades right now. Off the top of my head, they are, oh my gosh, I can't even think of them all of a sudden. TDS, Telephone and Data Systems, which is a bullish position. This one's not looking phenomenal at the moment, but it is at a key point right now. We'll see what happens tomorrow. Tomorrow, we may end up closing this position for a small loss, and that's fine. Losses are going to happen. It's just part of the game. But at the same time, it's also, like I said, it's at a key point. So this could very, very easily, if you look at the chart. In fact, here, let me just pull this up. I'll just open up a new one, I guess. All right, TDS. All right. So again, as I was saying, we're at that key point. This is a bullish position. Okay. I mean, I think it's easy to agree with me that this is more of a bullish pattern than it is a bearish pattern. Okay. I was expecting to have more of a breakout when it broke through here. Okay. I think, if I recall, we were like right in here when we opened up this position, and it took off. And then it's been kind of just doing a little bit more of a sideways pattern, very similar to what it was doing here. But again, if this can go back up now and then possibly break through, that would be great. I'm not ready to give up on this one quite yet, but it is getting close. I mean, if it definitely drops below the 50, you better believe we're closing it. And then the other one is good old Philip Morris. This is a bearish position that we have open right now, or I should say that I have open. And this one is looking good for us at the moment as well. It did have a nice little bounce right here these last couple of days, which, again, totally fine. We had a diagonal spread. So at the current moment, I'll just pull it up on my phone, and I'll just give you the numbers. All right, so currently, we are down in a $300,000 paper trading account. Okay. Oh, and it just now went up. We are actually up $887 for the day. On Philip Morris, we are up $937 today, $62.50 overall. Okay. And again, the reason I'm talking about this paper trading account is because this allows me to just track the trades. In my personal accounts, there's a lot of transactions, withdrawals, transfers, things like that going in and out. So I decided to also track it on a paper trading account. And as of right now, in this paper trading account, this Philip Morris position is up a whopping $62.50 overall. Again, mainly because I'll actually break it down a little bit further. The short 117 puts that we sold are up $1,800. And the 120 puts, the long 120 puts that we bought are actually down $1,700. Okay. Now our puts expire tomorrow, or I should say our short puts expire tomorrow, the short legs, the 117s, and our long puts don't expire for 36 more days. So if this is going to start moving back down, either tomorrow, depending on what happens tomorrow, we'll either roll those 117s, okay, or we might even let the long ones ride without opening up a new short leg, okay, or maybe we'll just open up, say, 10 to 15, okay. And what we'll basically be doing is we'll be making it a more bearish position than we currently have. Right now we have it as a mildly bearish position, but if it starts moving down big tomorrow as well after today, then yeah, we might make it a stronger bearish position. And then, we just talked about TDS. So the numbers on TDS and pulled up on my phone. Again, overall, we're down about $2,600. That's less than 1% of the total portfolio. But we still have 36 days for that one to expire as well. And if we go back to TDS really quick, okay, again, we're at a key point where it can either start moving back up or it could just fall apart and just break through. And if it's the former, then obviously we're going to let it ride and hopefully go up and break out of this pennant or flag that it's in. But if it does just break down, then we're going to be getting out of it because, That's what smart traders do. They identify when things are not going their way and they get out. So, all right. Well, that's all I have for you guys today. I hope you enjoyed it, and expect this to really kind of be like the format moving forward. Again, hope you enjoyed everything, and I hope you have a great rest of your afternoon. Take care.